I think Becky nailed it earlier. This I think is a trade based on where the 10-year is going. The question is which way you think the 10-year is going after this, and which way you think the market and some of these tech stocks are going, JJ.
Well, as you guys also said, if you look at the 10-year yield right now, Andrew, we're trading about 1.47. This 1.5 level, we're having trouble getting through overall. Maybe we'll get some clarity when Chairman Powell speaks today, and it'll be one of the last times we hear from them before their blackout period begins. So I think his speech today is certainly going to be perhaps more heavily watched than you would think for sort of a one-off occasion, if you will. With that, Andrew, we're also, if we look at the S&P 500 future, which is down again this morning, this 3780 to 3785 area is where we found support at a few different times so far this year. So we're trading right above that. As we came on the air, we were at 3790. So with both of those things going on, it'll be really interesting to see if this area holds once more. And, I have to believe in the shorter term, there's a good probability that it will, because I don't see what drives rates that much higher in the short term, and therefore we may be able to find some support in the market.
Hey, Surat, are you doing any repositioning as a result of all this right now?
Not directly, Andrew. If you remember, about 6 months to a year ago, we really positioned into financials, probably have north of 15% of our portfolio in there, 3-4% in energy. So really what we're doing is looking to add to some stocks like Morgan Stanley, which I think are going to really benefit even more with their wealth management business and M&A. And then, some of the reopening plays that, if we have new cash, we'll add more to the Ubers of the world that have really restructured their business. And then look at some of the other reopening stocks like a Diageo that as soon as you see more restaurants and hotels and people traveling. So there are pockets to add to. But I think fundamentally we are in a position where we want to be and really look for opportunities as the market kind of pulls back, because, as this 10-year moves back and forth, I think you are going to get opportunities to buy high-quality companies that a year ago you didn't want to touch because we didn't really have any clarity.
Okay, but let me ask you, Surat, would you buy, I don't know if we're calling it a dip right here, some of these big tech names which really are getting hurt, it really pushed down. Is that an opportunity?
I think for high quality tech, I think this is a time, Andrew, that we really have to kind of separate technology into companies that are trading on real cash flow and earnings as opposed to price to sales. Companies that trade on, I would add to companies like Facebook at this point. I think they've come back nicely. Google, real cash flow companies that have growth forward. But I would be very careful to look at kind of what people had poured a lot of money into a year ago. And some of those stocks that flew to the moon, I think are the ones that could come back very easily, just because they don't really have any fundamental support behind them.
JJ, what's the retail investor doing right now? And, we obviously watched Rocket go up, frankly, and down literally in the past 72 hours. What do you make of that?
Well, actually, our clients were yesterday net sellers of Rocket overall. So I think that, we continue to see so many times these meme stocks, et cetera, Andrew. It's very interesting talking about the reopening trade. We have a tool like Folio, which measures social data on our platform. It's interesting, stocks like Peloton are still getting a lot of really positive mentions heading into the summer. So I'm interested to see what happens with this reopening trade overall. We also saw that, our clients the last few days have been selling some of the airline stocks. So, but in times where, you talk about buy the dip, when things get a little bit crazy, buying the dip, let's face it, has paid off for people very well over the last 10 years. And so I think just like, in football, when you run a play that can't be stopped, people continue to run that same play until it is stopped. And during those times, the FANG stocks are exactly the ones that tend to look attractive to our clients during times of turbulence. So that's why I'm so interested to see if we do find the support right here.
Shepard Smith here. Thanks for watching CNBC on YouTube.